Hi, and welcome to the Price Action Analyst YouTube channel. I just want to do a video on an Amazon trade that I took yesterday. So this is kind of in conjunction with the rest of the market turning around. And again, Amazon comprises a big part of the S&P 500. So when it turns around, it shows up in the S&P 500. That's Amazon. Amazon there, the last 3 days of price action. That's the S&P 500. So relatively similar in terms of its price action. I took a short in this day at 12:30 p.m. and I'll go intraday in a minute just to have a look at it. But what I want to show you is that historically this was an all-time high here where we are right now. And then zooming in, price had gone up outside of the Bollinger Band, and then outside of the Bollinger Band, and then left this wick. So there's no historical price action to compare this to, but irrespective, I've now got a Bollinger Band. Price has gone outside of the Bollinger Band and left a wick. So the next day when I saw this, I believe price action was right about the 2647 level, and we'll have a look at the moment because I know the trade was at 12:03 p.m. But as soon as I saw that, anytime price retraces into this wick, you want to go short in this situation. So just zooming in, that's yesterday here. So 12:03, right there. So this is the previous day that formed the wick. So it opened there and closed there and had rejected those higher prices. And price had gone up into the wick. So, it would have been ideal to hit it there, but it was still just kind of at the wick at 12:03. There's the open there. So I'm just falling outside of the wick. And so I hit that trade 12:03 right there. And it was looking to me as price was going to roll over and test and come outside this trend line. And it luckily it did. And then it went down quite strongly for the rest of the day. So the only way that I know to get into something like that is when price does that outside of the Bollinger Band. So the wicks are not necessarily important, but they're important in the right place. So here I want to get short anywhere inside that wick. And so at 12:03, I was a little bit late, but I hit that short, and then you can see the following 2 days price action looks like that. And I think this is going to go further down. I don't think it's going to hold there. So this is today's price starting here. It's pushed below this low. You got a little bit of buying support after the wash. It's gone down. It's left a wick. Price has gone up to this Bollinger Band on the intraday, and now it's rolled over again and pushed up. But the strength, if you look, the strength is on the downside here. So I'm expecting it to eventually push, at least retest, and then probably push lower. So I just want to talk about how I traded that short action. Just bear with me for a second. There we go. So those red lines are my entry prices, and so what I did was I took a put debit spread. So that means I'm buying the 2635 put, and I'm selling the 230 put. and I'm paying 2.5 to get into that put, and the maximum upside is 250. So the maximum that spread will be worth is the difference in the strike prices. So 35 minus 30, so $5 times 100. So $500 will be the maximum that's worth, and that'll happen if at expiry prices a cent below 2630. That'll have a maximum value of 500. So I'm spending $250 with roughly a 50% probability that price is below that at expiry. Now, that's the main way to make money. The other way to make money on that is if price pushes down fairly hard, which is what it's doing. So from here, or from there to where price is now, the value of that spread's gone from 2.5 to, last I checked just before the video, is at 3.1. So that's an increase of 23.4%. I have an exit order at 3.8. And if that gets hit, like if price can come down here somewhere, roughly, it should get to 3.8. If that gets hit, that in total is going to be a 50% return on the 250. So you can do that. You can take a put debit spread if you've got more money. If you got more than 250, you want to risk more than 250, you can increase the number of contracts. That's just one contract. So 2 contracts would have cost me 500 and change. 3 contracts would have cost 750, and you're looking to make about a 50% return. So the other thing I want to do in this video is I just want to compare. The reason I'm taking put debit spreads is because this account is not big enough to take advantage of the puts. So just to give you an idea, if I'd have bought the 2635 put alone, on the day that I paid, at the time I paid 250 for this, and because I can see what the individual leg prices cost, this 2635 put was worth $8,135. So if you were willing to take $8,100 worth of risk, you could have bought just the naked put option with a strike price of 2635 and ridden that down. And again, I checked the prices just before the video. That put option, that 2635 is trading at 134.9, so 13,490. So that is a 65.8% return. So where my put debit spread has increased 23%, the naked put option has increased 65%. So I just wanted to do that to sort of give you an indication of the differences between put debit spreads and buying the naked put. And also, I've mentioned it in a couple of videos, this has a lot of predictive power. A poke outside of the Bollinger Band level, sometimes at the right level, like if it's a previous selling area. This one wasn't, because these are all-time highs, but still a poke outside of the Bollinger Band and an indication of selling pressure. I want to get short within that wick, and I basically did that. I was just coming below the wick yesterday, and I got into that trade. And they are scary trades because it is counter trend. This is a very strong uptrend, but they're predictable. You're getting the selling pressure, and as you can see now, Amazon looks like it's just starting to roll over again. So it's coming for this lows. Even there, he's selling. People tried to buy it, and the buying's been rejected. So it's giving every indication that it's going to come lower here and test. So at the moment, I'm just going to hold that put debit spread. And again, my exit order of 380 is sitting there waiting to get hit. So hopefully that'll just happen by itself. So that's pretty much all I've got to tell you about that trade. Again, hopefully just gives you a bit of an idea of alternatives to buying naked puts, because they're relatively far more expensive, and also the predictive power of this setup that I keep coming back to. So again, if you like the video, please give it a thumbs up, please subscribe, and if you have any comments or requests, please hit me up in the comments section, and we'll see you next time. Thanks for listening.